All right, welcome into Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy. Thank you very much for being with us on this is a big day, one of the bigger ones I can remember in a long time. We just had CPI, came in slightly lower than expected. Markets are loving that. We've got obviously the WASD today at 11 Central, 12 Eastern. And then we've got the FOMC. So boy, oh boy, it's not going to be a boring one today, folks. So buckle up. Let's see how these markets did overnight, and we'll talk about what we've got in store for us going forward. But let's check in. We'll start with corn. Corn's up 2 3/4 cents overnight to 4.52 1/4. This is just a half cent off the high of the day, and we've had about just over a 4-cent range, right? So that'll give you an idea what's happening there. Dees is up 2 1/4 cents to 4.67 1/2, and that's 3/4 cent off the high of the day there. And we've had let's call it I would say 4 1/4 cent range there too. So that's what's happening with the corn. 4 1/4 cent range. We're just kind of up the upper end. Boy, get that out twice. Soybeans, they're up 3.5 cents overnight in July. 11.81 1/2 is last. And again, that's about 4 1/4 cents off the high of the day. And we had almost a 10-cent range, working on a 9-cent range there. So that's July. The new crop was sharply unchanged at 11.51 1/2. And again, we had about I'm gonna call it a 8.5 cent range. All right, that's beans. Let's go to the wheat. Start with Chicago wheat. That's down 10 cents, 6.16 1/2, 2.5 cents off the low of the day, and we had about a 13 3/4 cent range. You go to the Dees, that was down 10 3/4 cents to 6.60 3/4, and that is about 2.5 cents off the low of the day there. And we had, I'm going to call that a 13-cent range, 13 1/4 exactly in the Dees wheat in Chicago. From Chicago, let's go to Kansas City and take a look at the hard red. That's down 13 3/4 cents to 6.41 1/4, 2 1/4 cents off the low of the day. And we had, let's call that, trying to have about a 15-cent range there. Dees was down 12 1/4 cents to 6.72. 2 3/4 cents off the low there as well, and we had about, let's call that 13-cent range, 13.5 cent range there. That's the hard red in Kansas City. The spring wheat, Minneapolis, that's down 10 1/4 cents up front. That's July, 6.68 1/2 is last there. And that's a 1 3/4 off the low of the day, and we're working on about a 12-cent range there. Dees, that's going to be down 9.5 cents in the spring wheat. Minneapolis, 6.98 1/2 is last there. And it's 1 3/4 cents off the low of the day. And we had, let's call it about a 14-cent range-ish, just under 13 3/4. Then finally, let's go to the cotton market. We'll get to a guest analyst. Cotton down 29 points in July, 72.44 is last there, and we're 15 points easier in the Dees to 72.28. Let's bring him in. Brian Hoops, president of Midwest Market Solutions, Springfield, Missouri. Thanks for coming on this morning. All right, what are your thoughts? What's top of mind? The floor is yours.
Good morning, sir. Yeah, you mentioned the CPI numbers out this morning. Stock market loves it. Crude oil's higher. U.S. dollar sharply lower. This was the 38th consecutive month of inflation above 3%. So I know a lot of people now getting excited that the Fed's going to cut interest rates this afternoon. I don't know that that's the case. I think there's a better chance maybe later this year because that inflation number is still fairly high, even though it was just slightly below expectations. But nonetheless, stock market higher. Could be a little supportive to commodities in general with the sharply lower dollar, but really our grain trade is going to be influenced by just a couple things. Supply and demand report that comes out at 11 o'clock. I do expect that the U.S. increases old crop corn exports by about 25 million bushels, and that would cut ending stocks by a similar amount. I don't expect that they'll make any production changes for corn or soybeans at this stage of the game. I do think they will increase winter wheat production numbers based off of some early harvested data, and that looks to add ending stocks to the U.S. Wheat balance sheet. So not much changes for soybeans, a little bit of a friendly change for corn. Wheat is going to find harvest pressure and maybe some news from this report today that's in the form of a bearish news mentality. After that report, we go back to trade and weather for the next week and a half or so until we get to the end of the month, stocks and acreage reports.
Yeah, I mean, I guess what I asked them about on the radio show I did this morning is we just had the funds cover, and we got 30 to 40 cents out of it in corn, which I think is pretty paltry if you ask me. But if you're a bull, it's probably not going to come out of this report, is it? We're going to probably have to either wait for A, weather, or B, something at the end of the month. Is that right?
Yeah, I completely agree. And right now the bulls are pointing towards next week's heat wave as a reason to get bullish to this market because they're using terms like ring of fire, dome, and trying to trying to get people excited. But you talk to almost every farmer out there, what they want is heat, and they want some dry weather right now, and that's what the crop desperately needs. And I think we're going to get that heat. You get into July, if we're still talking this type of heat and no rain, it's a different story. But next week, I don't think it's any concern whatsoever for the trade at this point in time. So it's going to be hard. I think, rally, if we get a rally in old crop corn because of that cut in ending stocks, that translates into maybe smaller than expected U.S. ending stocks here for the new crop marketing season. I suspect that rally is going to be sold by people who want to catch up on some hedges.
All right. That's a great way to end it. We're going to go away. We're going to pay some bills. We're going to come back and talk more about what happened yesterday in the livestock market, and we'll get any insights about what might happen today with Brian Hoops, Midwest Market Solutions. We'll be right back after this. All right, welcome back. Let's take a look at the livestock action as of yesterday, right? Let's take a look. How do we close out that live cattle board? Well, I'll tell you right now, there wasn't a lot going on yesterday. We did have an easier board in August by about $1. $1.05 lower to 178.92. We were 30 cents lower in the D's to 185.25. So that was live cattle. Feeders, well, they followed suit a little bit. August was off $1, 257.65. It was a pretty quiet day though all around. November's down 90 cents to 259.10. And then as we take a quick peek at see what lean hogs did for us, everything in the livestock sector was just kind of steady to easier. We've got a July board in lean hogs down 62 cents to 92.27, and then we're off $1.10 in October to 76.67. So with that in mind, let's get back to our guest analyst, Brian Hoops, Midwest Market Solutions. Anything top of mind there that you want to get off your chest when it comes to the livestock?
Screen looks like it's going to open about 10 higher in the August cattle, Scott. Packer margins still are in the black, about $26 a head. So feedlots are hoping to use that as leverage to try and get higher cash trade this week. We've gone at least 2 weeks now with steady to lower trade, looking for some sort of a bounce because of the show list numbers being down, but a little profit taking in the cattle. I don't think it was anything that really changed overnight in this to tell us that we're not going to see additional short covering. The hogs are a little bit different story. The weights that came out this morning were down from last week, but still show us 9.1 pounds heavier than a year ago. So a lot of tonnage coming at this market. And, hogs need to have some sort of a technical recovery, but we're just not sure from what price level that's going to be because they're kind of in a free fall at this point in time.
With the stock market doing what it's doing today, I'll be interested to see what the cattle do if they like that or how that makes them feel. I mean, I said it on the radio again earlier too that 10% of America owns 93% of the stock, so it doesn't really. It's more of a wealth gap than rather kind of trickle down. So we'll see, but it's going to be an interesting day because then we got WASDE and then we'll have the FOMC later. So it's going to be one to buckle up for. Appreciate you coming on. Got us started off on the right foot. Thank you very much, Brian Hoops. He's with Midwest Market Solutions, Springfield, Missouri. And I'll come on board and say good morning to Tam.
Good morning and happy Wednesday to you.
Yeah, right.
All right. Thanks, Scott.